case.
What's up, guys?
Hello, hello.
Is that Andy or Grace or both?
Hey, Neil. Hey, guys. It's Andy. It's Andy and intermittent Andy because I got the kids and bedtime stuff going on,
Okay,
but I
Okay.
want to try to listen as much as I can.
Well, we
cool.
are recording, so a rerun will be available.
Awesome. Thanks, guys.
Hey, Vlad. Michael Walton, how you doing?
Doing just fine there, young man. Things are
I can
great.
see, I can see part of you. Oh
Yeah,
man, you
there
got
we
a
go.
beard going now. That's first.
Yeah, I'm prepping for Santa Claus later this year.
Oh, how long does that, I've never grown a beard. How long does it take you to get,
Never
like
had
from
a
where you
beard in
are?
my never had a beard in my entire life, but I started it in February. By the beginning of April, it was pretty good. This has been cut like 6 times now.
Oh, okay. So you can go in 2.5 months or so, something like that, 3 months to get.
You'll
Two,
have
two,
a
three
full
months,
beard,
Bob.
and yeah, you'll have a full beard pretty quick. That's for sure.
Oh, yeah. Mine's pretty heavy. It's always been. Although as I've gotten older, I think a little less so. Okay.
Yeah, but I do have plans. So I'm going to take this and put it here.
Oh, okay.
I wish. I wish.
Didn't know that was an option. You have to
If they can take it off the back of the head and do it, I think they could do it off the front, but no, I'm not going to do that.
well, take a trip to
Yeah.
Turkey, right?
Hmm.
That's the thing, those hair transplant trips.
Hmm. Eh,
And
not
and
not
and teeth
anymore.
also, Bob. I've heard teeth much cheaper to get it done there than here.
At where, Max?
Turkey.
Oh yeah, yeah, yeah. I've heard the same thing.
Yeah.
Chelsea. I'm not sure who Chelsea is. Let's see. Or should we give it like 2 minutes?
Sure. I'll get started.
Yeah.
So let me ask you a question. Since I'm a rookie with Bitcoin and the vault that Max suggested I buy, I set it up. I've never done a thing with it since. So I assume those millions of dollars that you guys have sent my way, it's all there now, right?
I mean,
Well,
I think it's tens of millions.
Is
Yeah.
it tens? Okay.
I
So I
think
mean,
it's
it'll sit there waiting for me to activate, right?
yeah. I think it's a little less than that, Mike. But if
A little
once you
less.
once you open it and you see the deposits, you will see that the transactions are there.
Okay.
I had another buddy who couldn't get into his and eventually just realized that, and this is for some other folks, he wouldn't power up and he thought it was broken. And the reality was that the battery was just gone, totally
Hmm.
discharged. So you had to bring it to room temperature, then plug it in, and then it powered up. So if anybody has that issue.
Okay, Bobby, want to start?
Yeah. Well, okay, well, thank you for those who joined, those that are catching this on the recording. Hopefully you get some feel for where we are here. We're now almost exactly at the 1 year point from when the funding of the project occurred. We're about what are we, about 6 months now from when the operation really kicked in. We thought it would be good kind of here at kind of the 1 year anniversary of the project kicking off, maybe about the 6 month point of the operation really going forward, to just kind of go through where we were as an organization, give you guys a chance to ask questions or make comments. Max sent out at the end of June a pretty detailed update of what we've been working on and where we were. We thought we'd start by kind of walking through that. We'll walk through the P&L statement a little bit, and then maybe talk a little bit about what we see happening in the coming few months, and then open it up for questions and comments. I'll kind of start from where we are operationally. So we have 15, or excuse me, we have 11 gen sets operating on our site. The containers are all full. We have had excellent success with the energy production side. We've essentially had zero issues with the gas. So if we kind of divide it into sections, there's getting the gas out of the ground and getting it to the generators, I would say probably as close to perfection as we could get. Scott, maybe we had, I don't know, a few hours of interrupted gas or something like that at this point in the last several months, like almost nothing.
Almost nothing.
Yeah. Um, the engines themselves, which said we have 11 of them, they have also largely had phenomenal uptime. Should point out, not without very significant efforts from Scott and his team. Scott Wilhelm, who's on the call, you can see here, leads that effort. And it's been a chore. It's not for the faint of heart or, for the lazy to keep these things going. Because we run them hard. If you recall, these are 22-liter V12 engines running 24 hours a day, 7 days a week. They don't take holidays off. There are no snow days. You know, and they suffered through a really difficult winter. Now dealing with a lot of heat. But our uptimes have been fantastic. I think Neil, you have the one chart. Maybe that'd be a good time to show people. But
Sure.
our uptime is really approaching 99%, which is, I mean, it's just outstanding. It may not mean a tremendous amount, but yeah, if you look, is the one, Neil, where you have like all the runtime of the engine? Well, you can see.
Yeah, the green. This is the green down here.
Well, there was one that showed like how many hours each generator operated.
Right. It's if you look here, it's right here. Like
Oh,
this
got it.
already-
Oh, I'm sorry. That's what I missed.
Yep.
Um, so we won't walk through all of them, but it's really good. Which one? So in this, was it numbers one?
Yeah, they're labeled up here, but not down below. So
Okay,
like
go ahead.
so one number you can map them up here. So you can see the one in the upper right hand corner. We have KS1 for Keystone, and then ICC is a separate company. So you can see like RHP4 is actually running. There's just a problem with calculating how many hours it's been running, but that's one of the ICC ones, not the KS1 ones.
I don't know. Is it possible to blow that up, Neil? Like, maybe even just zoom in on one of them.
Yep. Zoom in.
So by the way, Neil has done a phenomenal job of building these dashboards to help us run the business. These are all things he built with AI, and they're giving us real-time feedback across all the operations. How much? Can you just like pick one of them, Neil? Like, I don't know, number 15 or something like that, or I guess that one's not one of the KS1 ones. Doesn't really matter which one, I guess.
And just kind of walk through it.
Yeah.
Okay, so we can look at RHP number one, which is a KS1 engine. So right now it's running at 300, and this is like a moment in time. Right now, when I hit refresh, it's running at 301 kilowatts. 325 is the capacity. There's 275 kilowatts are running the miners. 27 kilowatts are running the overhead, like the fans in the generator and the actual electrical in the generator itself. We're producing 12.9 petahash. We have 60. This number is probably not right. There's a reason for that. And then we're running at right now 93% of load. So that's what this number tells you. If you go down here to number RHP number one, you can see that we've been up for the last 2,485 hours. We've been up 100% of the time, not even down for less than an hour. You can see over here, there's one like this one, we were down for 4 hours up here on RHP 12. If you go up here, it's kind of like a snapshot of just some metrics. Some of these metrics are better than others. We're kind of playing with them. This is the genset uptime. Okay, this is how many kilowatts we're utilizing at any given point in time. This is what percent of the slots are full. This is like a quarter to date number up here. This is a now number down here. And it's not, there's not all this information is perfect and correct. There's lots of, this pulls from many different, 3 or 4 different APIs from our software, and not all software is not always running correctly. So it's one of the things we're kind of struggling trying to find our key KPIs that we want to use correctly. And you can see that right now we're running at 95.2%. So right now the maximum petahash we could have is 230, and we're running at 219. And that's about as good as you're going to get. I mean, we might get a couple percent higher. Maybe we'll get a couple percent, 3% higher in the wintertime. But with how hot it is, when the miners get too hot, and Scott can speak to this, the chips get too hot, they fire off to the software. The software sees that they're too hot and lowers the power going to them and lowers their petahash. So this is like stock petahash that you get off of the what do you call it, the spec sheet. But in real life, you almost never get that because you're not in a laboratory. So that's kind of one way we look at it. And for this, is there anything you want me to speak to besides that, Bob?
I'll just add, that again, we're obviously the goal is 100, but we really can't get there. In terms of, so a hash rate, just, refresh too, is you could think of it as the computing power that we're generating. So there's theoretical maximum of 100. We're getting north of 95%, and that can be because we've had a throttle back because of temperature. It could be because something within the units is failing, and we have on the order of 1,400 servers that we're operating within these. So obviously, at any one point in time, for some of them to be having an issue, one of the things we also do is we have a stockpile of backup units. So we try to get, I'm using roughly 1,400, try to get the best 1,400 units that we can operating at all times. But if we have a failure and we have to take one out of service, we'll have a unit that maybe operates at 2/3 of the capacity of that other one that will slip in. So we kind of never stop. We essentially, most of the costs of this operation are fixed. So we want to just get as much operating as possible at all times. The energy is basically close to free. So, up to our theoretical maximum. So our goal is to just get something operating as much as possible. We've had a little more field. If there's an issue that we've been disappointed in, it actually has been in the units themselves. Part of that was honestly just purchasing some percentage of the units we initially purchased The very first batch of 200, we had a high failure rate. Um, those, both caused some financial pressure as well as some of the operating issues that we had initially. We're obviously not, we didn't buy any more from that source. And like I said, Scott has assembled a really great team. We have you plus four other people who are managing the site now. We have um, one guy in particular whose expertise is in you'd probably best categorize as the IT side. Like his expertise is in there. We have a couple people that you could probably think of as handymen that they can work with engines, they can mow the grass, they can pull a radiator out and change spark plugs and like do that sort of stuff. Um, so anyway, we have a mix of skill sets on the site. Scott, anything you want to say about that?
No, yeah, on the team, several of the guys are very well experienced on, as Bob was saying, on the computer side and worked for some pretty big industry names. So, and our local, which was um, quite a blessing to come across them. There's two of them. Dave on the team has been a builder, built houses for 30 years, all kinds of experience, very handy. His young son is with us as well. And so um, we're getting significantly better on the engines. I'd say well, just kind of an interesting point. Just Bob had mentioned earlier that we run the engines quite hard. Um, and just a little fun fact, I guess, is that we're changing our spark plugs every 30 days. And not for fun, of course. After 30 days, those things are burnt down. And so, in your car, you probably get how many years without thinking about your spark plugs. And after 30 days of use, and these are good NGK brand spark plugs, top of the line. And after 30 days, those things are in the garbage. So, and then the other just quick point is that I think the downtime, we're to the point where the vast majority of our downtime is at least scheduled. So, we're shutting the engine down to look at something to, swap a sensor out or we, change a filter or something like that. So, um, yeah, that's kind of a good metric that it's mostly us shutting the engine down rather than an alarm shutting it down and us having to go find it and figure out what's going on. So,
Yeah.
and that should only get better,
Yeah.
really.
And with this many engines running that hard, it's pretty much a never-ending process of, you finish getting everything up to date, and by the time you do that, you're back to the first one to redo it. That's whether that's filters, belts, spark plugs, like all that sort of stuff, oil changes, or like Scott, I know you had a call earlier. I don't even know the result, but we buy a lot of oil, and we're trying to find new suppliers for some of these things. Spark plugs, we've got a new source. We buy a shitload of spark plugs, so we're um, trying to reduce some of those maintenance costs on a go forward basis.
It's also Scott, how many quarts of oil go into an engine at an oil change?
11 gallons.
11 gallons per engine, and we're replacing those once every 30 days, times 15 engines on site. So you can kind of get that we've got like 200, what's that called? 170 gallons of oil that we're disposing of,
Yeah.
every month. I mean, it just starts to, you start to get a sense of what you're dealing with.
The scale of it is, yeah, amazing. But we're getting pretty good at it. Scott has the site in great order now. I mean, there was a period, as you'd expect, where things were messy because we had to uh, uh, dig trenches and run wires and all that. And so the first stage of the project was just get everything operating, and the second stage was kind of to get it in order, and we're past that stage now. Um, And, extend an invitation to anybody that's in that Western Pennsylvania area is always welcome to, let us know, and Scott or somebody from the team can take you through. It's a really cool thing to see and to feel. You're not around that much power very often. It's pretty cool. Um,
So but just to give you a sense of it, we have 5 megawatts that we're actually using at that site, and that's enough power to generate all the homes, all the retail, an entire city of 5,000 people is what 5 mega. It's about 1,000 people per megawatt, just to give you a sense of it. So that's how much power is in that one little acre of area.
yeah, yeah. Um, So one of the things we have to do is work in, lack of a better term, partnership with the Department of Environmental Protection, uh, and in the state of Pennsylvania. It's probably not the, well, worst, but most stringent. Worst is a bad word, but one of the more stringent places. But we're doing so. We had a site inspection. Was it last week? They were out, which basically, when they issued the air permit for us, it's actually a temporary air permit. It may well be that we never get a permanent one. Our understanding is that many companies go years or even decades with never out ever getting a permanent one. But they came out, they inspected. We had one small violation, which was a sensor, two sensors on each engine that measured pressure before and after the catalytic converters on these. That was supposed to be there. So we are having those put in. We don't expect to have any fines, and they didn't seem particularly upset. Again, this is new to us a little bit, but people with experience said that our I don't want to sound like Trump, but like it was a phenomenally like successful like uh uh inspection. Like nobody's ever had an inspection this good before. Like
Ever.
yes, 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 the great, yeah. So um obviously, and maybe I'll let you chime in, Neil. Maybe we could talk about, the Bitcoin price and kind of where we sit on the financials. And
We can talk a little bit about the expenses first, because I do want to
oh,
touch
sure,
on that.
yeah, go ahead.
So one of the things, the expenses are certainly higher than we thought and projected. We think that this will um, we're not actually sure what our future expenses are going to look like. Okay, and so let me share why I say that. We're still paying for a lot of upfront expenses even today. Today, like specifically today, we bought a forklift. Okay, because we need, it's a used one for $6,000, but like that wasn't on our budget in our startup expenses, that we needed a forklift to be moving stuff around and whatnot. And we have now we're going to need, we need trucks to move the forklift. We bought a pickup truck which wasn't on. So a lot of these kind of startup expenses are sound panels. We knew we needed sound panels, but we needed probably triple the number that we thought if we got some sound complaints. So paying for those, it has been an issue, and just kind of getting it up and running. We're One of the reasons you're not getting as big of a checks as you might have thought is because we're paying some of these expenses out of the operating, when we should have probably raised another 200,000 and done it up front. We hindsight being 2020, we learned our lesson, and we'll do it differently going forward. But we're still kind of paying the price. The DEP is causing issues for us. Like, I mean, everything Bob said is accurate, but those little sensors are probably going to cost us 15 grand that we need to buy, or somebody needs to buy. We're going to try to get that reimbursed from warranty or from the engine company, but I'm not going to count on that. So that's kind of what we're dealing with. At the same time that we're dealing with a Bitcoin price at the lowest, in the absolute bottom we hope it's the bottom of the bear market. Um, is there anything else you wanted to go over about that, Bob?
No, no,
Do you want me to talk about the Bitcoin price a little bit and the
yeah,
hash
sure.
rate?
Yeah, yeah, go ahead.
Okay.
Yeah.
So I'm going to share on one of our other dashboards with you. Give me 1 second here. And oops, try that again. This will be interesting for you guys that are not in the Bitcoin world or kind of newer to it. So this is a different dashboard. It's on the same, it's the same one. We just hit here to here. This is the price. You guys all probably follow that. This over here, there's a lot of information here for you to kind of gronk. So for those of you that know that the global hash rate, let me go over here. The global hash rate is over here. So remember we talked about that we have a percent of the global hash rate. So if the global hash rate is lower, we make more money. If the Bitcoin price is higher, we make more money. If they go in opposite directions, that would be very bad. Okay, so you can see the 90-day global hash rate is 951 to 936 to 937 to 909, and today we're at 897. So it's going down. That is good. Okay, and let me share one
By the
more.
way, last fall it was like 1100.
1175 was kind of like the top. So let me share one more screen with you, and I'll come back to the screen in a second. So this here is the hash rate. This is the last 18 months. Okay. Just because when you look at you look at the over, for 10 years, it kind of gets all lost. I just kind of broke it down. So you can see we peaked over here at that 1175. I guess we peaked at 1250 for a couple minutes or a couple hours. And then you can see it slowly working its way down. You can, the thing, and we obviously we don't know where it's going to go, but I guess we feel confident it's going to trend downward. It seems to be where everything's going. We have some of the cheapest electricity, the cheapest expenses in the industry, and you can see how rough it is for us financially. The average miner, a public miner, has an average cost of a Bitcoin at 78,000. So Bitcoin's at 60. They're losing money, hand over fist. Okay, we think our average Bitcoin is somewhere in that 50 to 54 range. Okay, so we're still like profitable, as you guys have seen in the profitability, but it becomes tough. Okay, and one of the reasons I want to make sure you guys understand this is you see a number like, hey, we made $49,000 this month, but we're putting aside money for future rebuilds for the generators. Those rebuilds are going to cost us between 25 and 75,000 per generator, 2 to 3 to 4 years down the road, and we're also putting aside money every month to buy additional servers. Our servers are fine today. They'll get us to the halving. After the halving, we'll probably have to refresh those and buy new servers. So basically about $30,000 a month is going towards those future bills, and we put that money aside in the Bitcoin. I'm going to show you that in a second also. So if I go back to, where was I at here? Here we go. So what I wanted to show you here, just kind of how this works, and it's really kind of cool for my, just that that Satoshi kind of created this way. So every 2 weeks or every like 1,600 blocks, you're supposed to hit a block every 10 minutes. Okay, in this epoch that we're in, we have 241 blocks left in the epoch. This little bit right here, or a day and 17 hours, and we are tracking 10 minutes and 27 seconds. So that is 4.29% above the 10-minute ideal. So what the protocol does at the end of this 1 day and 17 hours is it adjusts and makes it easier to find a block. So in theory, if this holds the way that it is, the next 2 weeks we'll mine 4.3% more Bitcoin. Okay, so green is good. So even though this is a negative, it's actually a good thing. Okay, so it'll become easier to mine Bitcoin over the next 2 weeks. If you take 24 hours a day and there's 6 how many 10-minute blocks there are in 24 hours. It comes out to 144 blocks. So you can see right now for the last 24 hours, we're at 125 blocks out of 144. So for the whole epoch, these 2 weeks, we're 81 blocks slow. So even though that's frustrating because it's less Bitcoin we mine during these 2 weeks, it'll reset itself and our income will go up over those next 2 weeks. Okay. This right here is our pool that we're in. We're in the ocean pool. And right now, so if you look at here, there's 897 exahash in the whole global hash rate. The ocean pool is 19 exahash of that. If you want to look at what KS1 is, we are 134 petahash. So we are 0.134 exahash. Okay, so this is 19, we're 0.134 of this, and this is, whatever that is of that, about what's that, about 4% or something of this number. So, and then we make or lose money based on the luck factor. So we should have hit at this point in time in the month, we're only 9 days into the month, we should have hit 36 and a half blocks. Ocean should have, and we actually hit 39. So we're on track to make 7% more Bitcoin this month than what we quote should make. And last month we were down, I think 1 or 2%. It just goes up and down. Okay, it fluctuates around that zero number. If you kind of look at where we are with the luck rate, what we're projected to be, we will mine 2.13 Bitcoin for the month. That can change. Okay. We've got 0.6 Bitcoin earned already through the first 9 days. So it's kind of like a little bit of an extrapolation. This is the projected revenue is pretty accurate. Okay, it's projected based on this Bitcoin price. So as the price goes up or down, this will go up or down. The expenses, we still don't quite have a handle on what that will be every month, but my best guess is right around 88,000 for that projected profit, which is about what we did last month. Once again, we have to take out that $30,000 of the money that we put aside. So if you want to talk about the money that we put aside, you can see it over here. You can see this is the operating wallet that we have. It has 0.21 Bitcoin. Blake, who is our accountant or our bookkeeper, this is where he sells the Bitcoin to pay the expenses. Okay, this is our server fund to buy new servers. We have 0.53 Bitcoin. And this is our generator fund. We have 0.86 Bitcoin. So you can see that we've only been in business for basically 4 to 6 months, and we already have 54,000 put aside. Now we really hope that these will actually turn into profit centers. Okay, and it's a hope, it's not a guarantee. Okay, but the idea is if Bitcoin gets to at the end of this year or the middle of next year goes to 120,000. These numbers double. So it's very possible that we could end up with extra money for the generators, and we can either pay that out to you guys, or we could just not put more money in on a monthly basis. But that's a year or 2 or 2.5 years away. So we're excited. So I guess it's a downside and upside. When Bitcoin price is really low, we have to put a certain amount of dollars aside. So we put $1,500 per generator aside. So $1,500 per month times 11 generators. So we're putting 16.5 aside every month. Well, when Bitcoin is at 60 grand, that's a lot more Bitcoin. Okay, so it's kind of like we're dollar cost averaging in with a lot more. We have to put a lot more Bitcoin aside to get that dollar amount, because unfortunately we have to pay for the generator repairs in fiat. So we have to make that conversion. If you look at over here, KS1 right now, we're at about 100. We're tracking about 134 petahash. You can see the 24 hours 138. Okay, probably the best we could be at is 149, give or take a couple petahash. And realistically, 141 is 142, 143 is like about the best we could be at. Okay. So, and these toggle on and off, up and down as the heat, it's very much heat driven. Okay. So Scott, the software the circuit boards get too hot, the chips get too hot, and then we have to throttle down, and our petahash goes down. And then at night, like when I checked last night at like 1 in the morning, we were up to 141 because it was cooler, and then automatically throttles up. This might be a good place to take some questions, Bob, since this might be new for a lot of people.
Yeah.
Does anybody have any questions? Yeah, Vlad?
There's a line item ICC loan. What is that?
So this is the dashboard you saw is for the 3 companies that we're involved in. So ICC is the 6 gen sets that Bob, Max, and I own, along with there's 11 that you guys own, and then there's NBV, which is our South Dakota that we started 3 years ago. So we just have it all on one dashboard. So
that's not applicable to KS1.
Yeah. Right. We put money aside to pay some investors off that lent us some money in ICC. So that's what that is. But,
Clear. Thank you.
Because we're debt free in this organization.
Right. What other questions do you guys have? Yep.
The exposure to Bitcoin, how much of specifically to the price of Bitcoin, the upside is clear, right? But if Bitcoin, if this is not the bottom, which I hope it is, right, along with everybody, and there is still room to go, then like how should we think about what may happen if Bitcoin is at 30 with the financials?
It's gonna be bad.
Yeah.
Okay.
but not as bad as, but it's not bad by half. And so it's really bad, but it's not as bad as that. And it's because of the hash rate. So again, think of it as what percentage of the pie are we getting? So I think if you do the math, like we're like, what was it? I think we're like 0.1% of ocean, which is 4% of the global. Let's just call it that. So if global hash rate fell by half as well, because the price went to 30, we would still get the same amount, right? We get twice as much because we're not turning off. So this was, if you go way back to the beginning and when we initially were presenting, we wanted to build an operation with the lowest possible operating costs. And part of that isn't just the obvious of, making money, but it's about being the last organization that can stand. Because again, if the price falls by half, the hash rate, it might not fall in half, but it would fall a tremendous amount.
The nuance to that, though, also, Vlad, is that it doesn't, the hash rate won't fall. Like the price could fall to 30 in a week, right? Like we see how fast it can move with Bitcoin.
Yeah.
The hash might fall over the next 4 months. So it could get really ugly for a couple months until the hash catches up to where the price is.
Look, I personally have been impressed by your team's ability and then the business's ability in general to actually produce paper profits. Yeah, because one of the main reasons I invested is because of the and Neil, you and me discussed it ad nauseum, right? Is that move, the hash rate and the price of Bitcoin and the costs of running business that all kind of fluctuate, but when you have the lowest hurdle rate, it benefits. So the fact that we made almost 40 grand last month is pretty impressive in my book, given all the headlines that I'm reading about BTC miners going out of business or transitioning to power, whatever that
AI, right?
Whatever that could mean. So I guess if I can compress my question into like a potential concern we already have a lot of exposure to Bitcoin price, but then we're doubling that exposure by keeping it in Bitcoin.
Yes.
Maybe not doubling, we're increasing the exposure to price by keeping it in BTC.
You're talking
Even
about
though
the
the
reserve.
reserve,
You're talking about the
in the
two reserve
reserve.
accounts.
right.
Yes.
And then
But
the accumulation as well, right? Like for example, the 30 or whatever we just set aside, we didn't set aside 30 grand. We set aside half a Bitcoin.
correct.
Yet all of our expenses are in US dollars.
Yes, but so you're 100% right, and we certainly learned a lesson with that, with the initial Bitcoin that was put into the company as the instead of the dollars. And we took a chance and we paid a price for that for sure. Okay. The only thing I would say is that the money that you're talking about, the Bitcoin that we're putting aside, is Bitcoin that we won't need at a minimum for 2 years, almost like 22 months. So I think we will be a little bit more pragmatic as we get closer to that time and start moving some of that into a money market, or we'll hedge it. Obviously you're big into hedging, I know, so we might use you as an opportunity to help us do that. But we're going to protect it as we go into when we're going to need it, but we don't feel like we need to do that 22 months in advance.
That's it.
Does that make sense?
Yeah, totally.
I'll also say that if the price sustains low, this is just me having, a network within the mining community. There is a lot of stress in the industry right now because this is an extended bear. And so if the price drops further, we don't know what will happen. However, there's a lot of companies that are on fumes right now. And so they don't have the capacity to operate at a loss a lot longer. We've seen the big public miners flee, obviously. But so the interesting thing about Bitcoin is that if we woke up tomorrow and the price was 30, just as an example, the we could see a lot turn off quickly. That because it's easy to turn something off. However, if we woke up tomorrow and the price was 90, there's no way to quickly redeploy and put new hash rate online. Like once it's offline and been decommissioned, like it's a long process to get back on. And so that would be wonderful, obviously, for us, like a quick spike.
Well,
oh, go ahead.
from what if we're talking theoretical there, from what I understand, what would really be beneficial is a spike to 30 for a few weeks, and then a spike to 90.
Oh, now you're talking my language, Vlad.
Right.
So, yeah,
So,
yeah, that is true.
So look,
that is absolutely true.
So all of those mechanics are brilliant, and the reason why I'm in this,
Yes.
Like the biggest upside is from the lowest price Bitcoin possible.
Correct.
Right. Correct. Yeah. My only, again, going back to what I think Neil addressed is the additional exposure to that potential spike down.
Right. Yep.
So the other thing I would say, Vlad, a couple things is, one is the miners, as Bob said, they're running on fumes. Okay, but they can last longer than we might think. They can sell their Bitcoin reserves. And if you look at the miners sold like 50,000 Bitcoin over the last 6 months, you can see that because the public miners release it, right? And a lot of them can't turn off because they have block power. So they have to pay the power cost. In order to get a lower price power, they have to buy it. So they can't. You could say, well, can they unplug and wait till the Bitcoin price goes up? Some people could do that. Like we could do that, okay? Because we don't really have a cost to doing that. But a fair amount of the miners can't do that, and they just have to they just go through their reserves until they go bankrupt, until they become insolvent. So you've got that can take a little bit. That can go longer than you think, right? That's the problem. Like we might see Bitcoin go to 80 and the miners drop down because they're still not like it just you don't know how long they can go. Like if you said, Neil, if it went down to 20, what would we do? Well, we could not put money into the reserves. I mean, we could really we have a whole nother level of that 30,000 a month that we could put towards our operating costs if Bitcoin went down to 20 or 30 or something. And that's what they're doing right now that we don't have to do because their price is 78, not
Right.
50.
Right.
So I wanted to say that. I also wanted to say, and I think it's really important you guys just kind of understand this because this was like an aha moment for me a couple of years ago. Is Bitcoin miners can turn off and the hash rate can go up. Okay, because people are upgrading their fleets. Okay, so while we have predominantly 141 terahash units, okay, 2 years from now, when we refresh the fleet, I don't know what we're going to have. We're probably going to have 234, 270. So there's two ways that the hash rate can go up. You can use more electrical supply to put more miners on the grid or on the network, or you can keep it the same and just upgrade your miners, and the hash rate can go up. So so there's some of that too. So what you're when you see hash rate going like this, it's the number of miners is actually going like this because the miners that are still here are upgrading and getting rid of their older ones and upgrading to the newer ones.
Is it possible that the remaining miners are just naturally, maybe not naturally, but they're more efficient? They're the ones that are staying, and that's what's
Yeah,
causing
for
it
sure. And the older
versus,
ones, yeah.
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 And
What?
right now they can't raise any money. So if they want to upgrade their fleets, go out and try to raise money now in the Bitcoin world. It's not easy, right?
Right.
So it's that trilemma that Bob talked about, a year ago that you can we're getting equipment at a third of the price right now for the miners that we were buying it from 7 months ago or about a year ago.
Yeah.
Right, Bob, we were paying 4,500 for a 234. Now we get it for 1,500.
Yeah. It's
Look,
amazing.
maybe, and I know I just monopolized the conversation. This is my last statement. Hopefully, maybe for the duration, maybe just on this topic. No promises on that. Is if you, as the managing partners, would consider diversifying slash hedging into non-crypto or non-BTC as currency, just in case you have to use US dollars to buy the crap of failed people.
So I think are you suggesting that we take the money out of the reserve out of Bitcoin and put it into fiat and put it into a money
At
market?
least part of it, because if I hope there isn't, but if there is a drop to 30, then not that you will need. I know that there's money on this call, okay? But like we will need to use fiat to buy stuff, and that stuff is going to be much cheaper in US dollars than in Bitcoin.
Okay, that's fair. I get it.
Just consider that, just
I
in
think it's
case.
something we can discuss. Kind of to feed on that, and there's a question in the chat from Josh. And for those who can't read it, the question is the drop in hash rate correlated to the bear market. How much of it is due to data center pivoting to AI versus just switching off? Do you expect to pivot back to Bitcoin mining quickly or at a price target? So my opinion is that the power allocation from the large companies going to AI we should largely think of as permanent. I don't see it coming back. In fact, I think that a lot of those companies, if you look at them, example would be Iron. If you go to their website, you have a difficult time finding the word Bitcoin. They have pivoted to being an infrastructure company, and almost all of them use similar language. A lot of the products like Neil talked about, we just bought for a different project. We bought a small number of S21 234s that he mentioned that were a year ago. We were paying $4,500 for those. We bought them for $1,500. And they were machines that were decommissioned from large pubcos. And I mean, that's a very current unit. I mean, that is, it's not the top of the line. It's like one below the top line. It's a really good unit. But these companies are leaving Bitcoin mining, um, even with units that even with a high cost of energy would be profitable right now. They would produce positive cash flow, but they're essentially saying, no, we can make more money by um, pushing that energy that they have access to toward AI. I don't think they'll come back. They were honestly all shitty at Bitcoin mining, pretty much from top to bottom. If any of you have been involved in Bitcoin mining stocks, I'm sorry, but I told you so. but but yeah, they're all. So anyway, the answer is no, they're not coming back, and so something that Neil alluded to, which was let's say even global hash rate stays flat. We'll just say that over, let's say, the next 2 years. That would reflect significantly less power being directed toward Bitcoin
Right.
mining.
Yep.
If you want to phrase it another way, significantly less power directed at Bitcoin mining over that time period. So, and then back to your point, Vlad, um, we do have to be on our toes because there is a scenario I could see where we say, well, we decide we're going to upgrade part of our fleet ahead of schedule because there's some unbelievable opportunity of, somebody trying to sell their units early. That could definitely happen. You could even argue that 234s at $1,500 is borderline, a candidate for that because that's a really good deal. So,
I don't know if you guys have a sense of it, but you guys have about I guess it'd be about 4 megawatts of the 5 megawatts is in Keystone One, and to turn that 4 megawatts into an AI data center would be about $80 million. Okay, or more. Okay, depending on what kind of data center you put it into. So once you go AI, you don't go back because you're making an $80 million investment. They're not going to turn that off when it gets not, and then get rid of $80 million of equipment and go put some, $2 million worth of equipment in. Like it. So I'm very confident that it's yeah.
yeah.
It's in the. I think I remember when I was talking to him. He's in the uh the software or engineering world, so he knows how expensive they are. The other thing I would say, and I was listening to a podcast with one of the guys, I think it was from Iron. They have a 500 megawatt facility that they are switching over to AI. So the market has viewed it like it's going to AI. It's still mining Bitcoin. So they have a facility right here that's all Bitcoin, and they're building another facility next to it. When this facility is done being built, they'll cut the power here and plug it in over here. Okay. So the market, the stock markets view them as like this AI company, but they're still mining, just as this one facility, 500 megawatts worth of Bitcoin. But when they turn that plug, then the hash rate's going to drop 5% right there, or whatever the number is. I don't know. But so we don't know how many people have actually turned off if you look at like the next 2 years, I think what Bob is talking about, you're going to see this constant decrease of power going to AI. I mean, we have to be at 2.5% power, 2.5 cents in, okay. And AI is okay paying 46 cents. Now that's with cooling and data, a lot of infrastructure, but they'll pay 46 cents a kilowatt hour and we have to pay 2.5. So you can see that they're just going to suck up every bit of power they can get.
Should point out, we believe that of what I would call consistently available power, just kind of
Right.
reaffirm something I said, of consistently available power, which I think our 99% uptime qualifies as. Um, I don't believe there's a cheaper place in the world right now. There'll be points in time when you could get that cheaper. When curtailment's happening, if you uh, like I said, basically you're willing to turn off or only mine at certain times of the day, you'll be able to beat it. Maybe get negative at points, but you can't consistently rely on it. Cheaper than what we do.
What other questions do you guys have? The one thing I just want to, I mean, I think you guys all know this, but I just want to say it is Bitcoin is a fickle beast. Okay. And it's our expenses are fixed. There's absolutely no expense that's tied to the Bitcoin price. So if Bitcoin doubles, I haven't run the numbers, so I don't want to say it, but our profit will probably quadruple or quintuple.
Yeah.
You follow me? Because it just 100% flows to the bottom line. So if we're producing 2 Bitcoin a month, we can actually do the math right here. If we're mining 2 Bitcoin a month and Bitcoin doubles to 120, let's just say, we're going to make $120,000 more in profit.
From 40 to 160.
Right.
The 4x. Yeah.
And that 40 is really not 40, right? That's only like 10 because of the reserves. So it goes from 10 to 90. So we'll 9x the profit by Bitcoin doubling. Now, it works the opposite way too. Don't get me wrong. Okay. When the Bitcoin price goes down, it gets really ugly because our price, our costs are the same. But so if we view it long term, we always said that this was the best thing to happen, and it sucks while it's happening. Because if we can get people out of the Bitcoin mining space and then Bitcoin takes off next year or the year after and we go to 120, 150, 180, mining's going to be really profitable. But it has to do that. What other questions you guys have? Max, anything you want to provide?
It's hard to get a word in with you and Bob on the call, so I'm just no. I actually had it written out here before you started talking about the minus trilemma. I was going to talk about the equipment that we are able to secure now that's way, way cheaper than it was last year. You guys have covered that. I mean, there's no easy way to say it. It sucks right now because Bitcoin is down, but when it turns, things should look way better. I think
I
you
think
guys were
talking
able
about
to
the
figure that.
trilemma is worth it, Max. I think even if we recover a little territory we've been through. So yeah, go. I think
Yeah, I mean, Neil touched on it. I mean, the equipment that we're buying, so it sucks that the price is down, but the fact that people are going out of business and selling their equipment that they bought last year for $4,600, which is what we paid for 234s last year, now we're able to get it for $1,500, $1,600. I mean, yeah, Bob, is right. At some point, we will have to make a decision. Do we pull some money out of the reserves for miners now and just upgrade our equipment and be able to drop more to the bottom line? I mean, stuff like that only happens when Bitcoin price is down. If Bitcoin price was at 150, that same $4,600 piece of equipment will probably be, I don't know, 7,500, if not more, right? So there's obviously many bad things that happen when Bitcoin goes down, but there's some really cool things like people going out of business and equipment becomes really, really inexpensive. And that's when we can acquire it. So we're looking forward to that opportunity.
But you got to have US dollars for that because you're going to be acquiring stuff in USD.
Correct.
Right.
That's right.
Okay.
Yep.
Well, it's 8 o'clock exactly,
All
Bob.
right. Well, thank you, everybody. So this has been recorded, so we'll put a link out there if anybody wants to review it, and we'll send it out obviously to the others who couldn't make it, and uh, we should have financials coming here for June. I probably expect them within the next week or so, huh?
Yep.
Yeah.
Yep.
Thank you, everybody.
Take care.
Thank you, guys.
Thank you, guys.